This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on November the 4th, 2016. Our time is 8:24 Mountain. Connect with us online if you ever miss a radio show. The shows are archived on Harold's two websites, HESradio.com, rarecoloreddiamonds.com. We have a podcast through iTunes. Type in the World Financial Report on Radio. We're also on TuneIn. You can find us on our own YouTube page and 6:30 CHED. Our show runs normally Sunday afternoon at 3. We're on a little early today, 12:30 until 1:30 because of the Oilers game. 6:30 CHED is now on Apple Music streaming, so we say hello to everyone listening to CHED on Apple Music. Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com, 1-800-432-1022, 1-800-432-1022. And this week, our featured diamond, and I was joking with Harold, we'll talk more about the diamond in the second half of the show. Wait a minute, we can't give this diamond up. This is the most beautiful diamond I've ever seen. It's a .68 carat radiant cut fancy green blue. The color on it is absolutely exquisite. Go see it at Featured Diamond of the Week, rarecoloreddiamonds.com, and unfortunately for us, it's going out of the vaults. Somebody is going to get the most amazing diamond on the planet, something you'd see in a museum. It is absolutely gorgeous. What a beautiful diamond. Check out our featured diamond at rarecoloreddiamonds.com. We are on before the Oilers and Red Wings game at 3 o'clock, the face-off show at 1:30. Good luck to the Oilers. The election day is in the United States on Tuesday, and let's face it, at this point, both candidates could make a case that they could win. It has been probably, without a doubt, the craziest political campaign in the history of the United States. And one of the things that traders are pointing to, flashbacks from the UK's vote on the EU referendum in June, have them preparing for a very rough night. In Europe and Asia, investors are still backing Hillary Clinton to win, with one firm saying 80% of its customers' dollars are backing a victory by the Democratic side. But at this point, Donald Trump, I would not rule him out. It is going to be a crazy, crazy night. And we will have to wait until Tuesday to find out what happens in the United States. U.S. job numbers came out this morning in the United States. They were expecting about 175,000. They got about 160,000. And not in the labor force, that number, 94,609,000. Close to 95 million people not in the labor force. In Canada, we gained 44,000 jobs, 44,000, but most part-time. And in the United States earlier in the week, as we talked about last week on the show, the Fed met. They did not raise rates. And the question will be, after the election, depending on how much turmoil there is, will they be able to raise rates in December? Harold, it was sort of a quiet week because everyone was waiting for the Fed, waiting for this election to be done. But once we get past that election, I think we're going to see some real fireworks in the financial markets.
No doubt about that. In fact, we're starting to see them now. 2 weeks ago, the price of gold was falling, and it actually hit $1,250 right on the button. And then we anticipated that it would continue because there was heavy support in the gold market at $1,250, but because it had dropped from $1,350, we've seen a $100 drop in gold, we anticipated that gold would have continued to fall. However, that was 2 weeks ago, and it came right down to the $1,250 number that we were anticipating. For the last 2 weeks, gold has gone up every single day, and the reason for that is that all of a sudden they found additional emails from Hillary Clinton's server, and all of a sudden the whole elections change. She was leading in Florida at that point. She's not leading anymore. They're in a dead heat. The fact is that gold has gone up about $55 in the past 2 weeks, and it's primarily because the feeling is that Trump could win. So now we have a better indication as to what's going to happen, because the market is now starting to factor in the fact that Trump could win. When they didn't feel he was going to win, gold was dropping. Now they feel that if he does win, that we're going to see gold rally. And the reason for that is that he's an unknown. Nobody knows what he's capable of and what's going to happen with him as president. So at this point here, the markets are still trading in a range. We're trading in a $50 range in gold. We're trading in about $1 range in silver. The biggest moves this week came in oil. Oil has plummeted. Oil has actually dropped almost $10 in the past week and a half, and gold right now is trading crude oil is trading at $43.84, down another 82 cents today. And the reason why oil is falling, we knew this was going to happen, was that Saudi Arabia says one thing and does another. You can never, ever trust when they say that they're going to cut production in order to boost prices. They don't do it. They cheat. And so does Russia, and so does other OPEC members. So at this point here, the oil market is falling substantially. The U.S. dollar is still strong. The U.S. dollar did hit very close to 99 cents about a week and a half ago, and now it's trading right now at 97.17. So we did see the U.S. dollar back off a bit, but the bottom line is that the U.S. dollar should remain the strongest currency. Now, again, we could see tremendous volatility depending if Trump or Clinton gets in. I do believe that if Hillary gets in, then the markets will remain fairly calm, because we already know what to expect from her. If Donald Trump gets in, that's where the unknown is, and that's where we could see some fireworks. Over the short term, you could see the gold market rally, just like we've seen for the last 2 weeks. So the fact is that gold could rally possibly on an extreme level up to 1,400. However, let's not lose sight of the fact that one of the reasons that we feel that gold is going to fall for the short term back down to around 1,100, 1,050 is primarily because of the Commitment of Traders report. Commitment of Traders report is a report that comes out that gives you the overall bullishness and bearishness of the commodity markets. In this case, we're going to talk about gold. And the fact is that the Commitment of Traders report is showing that the major banks, the commercial traders, are short the gold market. And from my experience of trading gold for over 30 years, when the banks are this heavily involved in the market and they're shorting the gold market at this point and silver, it's about a 90% chance that gold is going to drop and drop substantially. You know, it's banks like J.P. Morgan that have been allowed to wreak havoc on the precious metals markets, in all reality, for the whole length of this bull market. When we first recommended gold on CHED Radio, we recommended gold. It was back in 1999, 2000. The price of gold was at $250 an ounce, and the U.S. dollar was the strongest currency in the world. It was trading at around 110 against a basket of other foreign currencies. So the fact is there is a direct correlation between gold and the U.S. dollar. In fact, when the U.S. dollar is strong, like it was in the 90s, gold is not a good investment. Most people flock to the U.S. dollar, and if you remember back in the 90s, the U.S. dollar was very strong, so was the stock market, and gold was down at $250. It was only when we started to see changes in the U.S. economy that we started looking at gold again as a viable opportunity as an investment for our clients and for ourselves. And what we saw when we first started seeing major changes in the currency and the U.S. dollar topped out at 110, we felt that U.S. dollar was going to start to come down. And then 9/11 happened, and everything changed, and we started really buying heavily into the gold market, as did our Canadian clients. And the price of gold went from $250 all the way up to $1,900. It was the biggest bull market in history. We have never seen a bull market that matched that move in gold, where it went from $250 to $1,900 in 2011. At that point, just to show you the direct correlation between gold and the U.S. dollar, when this bull market started, the U.S. dollar was trading at 110 and gold was at 250. So you can see the correlation there. When the U.S. dollar is strong, gold is weak. Well, all of a sudden, the U.S. dollar started to weaken because of the attacks going into Iraq, because of 9/11, because of the tremendous rebuilding of New York and Washington and everything that happened. All of a sudden, we saw gold take off, but we also saw the U.S. dollar start to fall. And the U.S. dollar went from the 110 level, when it was the strongest currency, all the way down to 72 cents. And that happened in 2011. And by the way, when the U.S. dollar hit 72 cents, gold hit the highest level it's ever hit, which was $1,900. And then everything changed. The government didn't want gold prices to be high. Gold was on its way to $2,500, $3,000. All of a sudden, one day in 2011, we started to see that the exchanges where gold and silver were traded, they started raising the margin requirements. And for those of you that don't understand what that means, it means that when you trade gold in the futures market, which is the biggest arena for trading gold, they made it very expensive. They raised the rates of trading gold, the margin requirements as they're called, every single day for 5 days in a row. And instead of gold costing, let's say, $2,000 to buy a contract, now it was $10,000 to buy a contract. And what happened is the gold market started to plummet, and it fell from $1,900 all the way down to $1,100. It had nothing to do with the fundamentals of the market. The only thing that happened at that point was that the government did not want gold trading at the level that it was trading at, because it signaled that the U.S. was not recovering, from the mortgage crisis and everything that happened in 2008. So that's what happened. They manipulated the price of gold all the way down. The U.S. dollar started going back up, and now here we are right now with gold trading at $1,300, and the U.S. dollar is back up to 97 cents. I'm predicting that the U.S. dollar will be the strongest currency again, and it's going to happen fairly quickly. It's happening right now, and the U.S. dollar will go back up to that 110 level. However, because of situations in the market, gold is not going to drop back down to the 250 level. In fact, I think that there's very heavy support in gold at 1,050. We're not talking about a big drop in gold. In actual fact, what we do believe is going to happen is that gold is going to pull back, and then it's going to take off and run. So we don't trade gold. We buy and hold gold, because gold is a very important asset to own, especially with what we feel is going to happen over the long term, which is going to be the same type of inflation that we're getting in Venezuela right now, which is massive inflation that is beyond anything that we can understand. And a lot of that is going to due to the fact that the debts of the United States and other countries around the world are insurmountable. There's no way in the world that they're ever going to be able to pay back that money. That's why interest rates are at 0.5% or lower at this point. So the other thing that we should be concerned about right now is the fact that the stock market, because of the elections, the Dow Jones in the U.S. has been down 9 days in a row. You know that hasn't happened for 36 years. So what's happening in the marketplace today, and a lot of it is to do with the fact that all of a sudden Hillary Clinton started getting more flack because of the email situation, and that could be her ruination. That could be which knocks, the situation that knocked her out of the box. And in actual fact, that should have happened, because what she did was 100% illegal. And the fact that they're still allowing her to run for president is really a black eye for the United States. But at this particular point, it's a dead heat. Again, we saw the reaction of the marketplace this week due to the fact that Hillary Clinton had problems with the email again, and gold went up for 2 weeks in a row. Again, we've only seen a $50 increase, but the fact is, it's giving us a true indication as to what's going to happen if Donald Trump wins the election. If he wins the election, it could turn out to be a catastrophe. I mean, for all of us that are following these elections, I'm a Canadian living in the United States, it's a joke. It is the most ridiculous election I've ever seen, that a man like him could actually become president, and it just is a sign that the people of the U.S. are just sick and tired of politicians. And Hillary is a lifetime politician, where she can certainly talk the talk and walk the walk. Nobody has any faith in her. She is a liar, a thief, and a cheat, and these are the two best candidates for president in the United States. There's about 350 million people in the United States. It's almost impossible to believe that these are the two best candidates. On top of that, the fact is, as Randy talked about at the beginning of the show, there's 350 million people in the United States, and almost 30% of them aren't working. The unemployment numbers dropped to 4.9% in the United States, and that's only, it's not a true number because, again, a third of the people in the U.S. aren't working. And how many are children, that can't work? So people out of the workforce, adults that cannot work or won't work at this particular point, is sitting at about 95 million. There's 350 million people in the United States. You do the math, it's an unconscionable situation. So at this point, this is what we see. Again, nothing much is going to happen in the market unless something, until the elections, and something big comes out. If they arrested or threw out Hillary Clinton, then these markets would go berserk. But I don't see that happening at this point. So we see the market trading in a range until we see what the results are. If Trump gets in, we see gold going up short term until people start to feel comfortable that this guy is not the loose cannon that we all believe he's going to be, and the markets are going to be calm. So at this point here, until next Tuesday, the market should trade in the range. What we do feel is going to happen, because of the low prices in oil, that the Canadian dollar is still going to fall. The Canadian dollar is at 134 at this point here. I'm predicting that the U.S. dollar, the Canadian dollar is going to trade at 160 to 170 against the U.S. dollar. For the last 5 years, I've been instructing my clients, mostly my Canadian clients, to get out of Canadian dollar-based investments, because the Canadian dollar is going to continue to fall so substantially, and get into U.S. dollar-based investments. I don't mean buying stocks in any way, shape, or form. I believe that stocks are one of the worst investments you could buy at this particular point. What I am saying is that my company has private investments outside of the stock market and banking systems type of thing. These are private investments that my Canadian clients can partner with us, and my clients are making over 25% a year. There's nobody who's making 25% a year except for our company clients that are not only making 25% a year or more, but on top of that, they're getting paid in U.S. dollars. And if I'm correct and the Canadian dollar goes to 160 and the U.S. dollar is trading at 110, you're looking that you'll make about 50% return on the currency alone, let alone what our investments are making. With interest rates at 0.5% and going lower, and there's very few countries in the world that can raise interest rates. The only country that can raise interest rates right now is the United States. So the U.S. dollar is going to continue to be a strong currency, will be the strongest currency, and you need to get out of Canadian dollar-based investments. No stocks, none of those investments, because the Canadian economy, with oil prices this low and the Canadian dollar so low, is not doing well. So the fact is that sometimes you have to jump horses midstream. And the fact is that the Canadian dollar is going to fall, the U.S. dollar is going to go up, and we have investments that are private that our clients are making over 25% a year. Give us a call, and we'll certainly explain to you how you can get involved in that. These are for our Canadian clients, and again, because of the currency exchange, it's important that you get out of Canadian dollars and get something into the U.S. dollar-based investment market, and we can help you in that area.
Speak with Harold personally, privately, 1-800-432-1022, 1-800-432-1022. The website is rarecoloreddiamonds.com. rarecoloreddiamonds.com. Get our free weekly newsletter. It's the companion to our radio show. You'll be on the same page that Harold and I are on when you see all the articles that we talk about. Connect with Harold, 1-800-432-1022. rarecoloreddiamonds.com is the website. One of the things that caught my attention this week, and we have it in our newsletter, European banks are stuck with 1.3 trillion with a T, of bad loans, according to KPMG. 8 years after Lehman Brothers collapse sparked the financial crisis, European banks still have 1.3 trillion of non-performing loans and will probably be stuck with them for decades to come, according to KPMG. Anemic economic growth across the region is making it harder for lenders to offload toxic assets, hurting profitability, while banks also come under pressure from tougher capital rules and fines for misconduct. Now, they say firms could take decades, that's right, decades, rather than years to reduce their exposure, hampering profitability. European lenders are battling to cut soured loans as they face evaporating income from lending amid negative interest rates from the European Central Bank. Net interest margins, the difference between income from lending versus cost of funding, the average about 1.2% in the region compared to about 3% in the United States. Reversing the profitability of European banks is not a lost cause, but it will certainly be a lot of hard work. It will take decades. It's clear that across the United States, they're having trouble with their banks at times, but it's worse in Europe. In fact, European banks are still grappling with the new world low of basically negative interest rates and mounting capital and regulatory costs. The total value of toxic loans in Europe has surged since 2008 from about 1.5% of lending to more than 5% since 2013. So just a something to think about. You can see that the ramifications of the financial crisis continue to live on today, which we all know, but it's really hitting the European banks very, very hard. One of the other reasons, and Harold has talked about it in the past, that we invest in hard assets like diamonds, gold, and silver is because of the currency market. And we saw this week that in Venezuela, that the currency continues to collapse, and there is a black market there. But one of the interesting stories, you can find it in our free weekly newsletter, they are, if you can believe it or not, weighing. When you go to buy something, Venezuelans are giving up on counting piles of cash and starting to weigh them. At a delicatessen counter in eastern Caracas, Humberto Gonzalez removes slices of salty white cheese from his scale and replaces them with a stack of Bolivar notes handed over by a customer. The currency is so devalued, and each purchase requires so many bills, and instead of counting, he weighs them. He says it's sad. At this point, I think the cheese is worth more than the money. One of the other stories that came out this week, if you live in Egypt, you would have had a real eye-opening experience. You wake up and your currency has crashed 48%. Simply unacceptable, obviously. Egypt tried to draw a line under a deep economic crisis Thursday by allowing its currency to float freely. The move saw the Egyptian pound crash 48% against the U.S. dollar. So, Harold, this is why we say, have hard assets like diamonds and gold and silver. You wake up in the morning and suddenly your currency has crashed 48%. We saw that in other countries as well, like Switzerland, when they went off the euro peg. One day you wake up and it's like, whoa, what's happened? And this is one of the reasons why we really advocate for hard assets, because in the world we live in today, it's the least dirty shirt, and that's why we recommend the United States. They seem to be in the best position at this point. But there's a lot of countries out there that are debasing currencies to stay relevant, and if you're obviously living in those countries, it's a very, very dangerous time for the money that you have. Harold, we have about 2 minutes left.
Yeah, the currency markets are something that you need to understand, especially, if you're going to make money in the marketplace. So you saw the same thing with Brexit. If the people of England or Britain did nothing, just sat there and just waited for the results of Brexit, which was shocking, their currency dropped 25% in one day. 25% in one day. You lose 25% of your net worth in one day because of a decision that's made by somebody else. It's the same thing that just happened in Egypt. Your currency drops by almost 50% in one day. That's unconscionable. There's no way in the world that you can survive something like that. And in Canada, don't forget, it wasn't that long ago that the U.S. dollar and the Canadian dollar were even. In fact, the Canadian dollar was stronger. And now you're looking at the Canadian dollar is trading at 134. What that means is if you wanted to go to the United States and buy $1,000 worth of American dollars, it would cost you $1,340 Canadian to buy 1,000 American, and soon it's going to cost you $1,600 to buy 1,000 in American. So if you don't understand the currency markets, how they affect you, and how you can actually use them to your tremendous benefit, as my clients are, give me a call. I'll show you how we're making 25% a year on our private investment, and then add into the fact that these are all in American dollars. My clients are doing tremendously well at this point.
Speak with Harold, 1-800-432-1022. 1-800-432-1022, the website, rarecoloreddiamonds.com. We're going to come back and talk about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on November the 4th, 2016. Normally our show runs on 6:30 CHED, Sunday afternoon at 3. We are on today, 12:30 until 1:30 p.m., and that is prior to the face-off show, the Oilers versus the Detroit Red Wings at 3 o'clock. Good luck to the Oilers. After a great winning streak to start the season, they've been on a bit of a losing streak, so it'd be nice to turn it around in Detroit. And we're on for about a half an hour more before the face-off show. Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com. 1-800-432-1022. If you ever miss a radio show, they're archived on Harold's two websites, HESradio.com, rarecoloreddiamonds.com. We have a podcast through iTunes. Type in the World Financial Report on Radio. You'll find us there. We're on TuneIn. Also YouTube. 630 CHED is part of Apple Music now. You can hear CHED on Apple Music. But if you're interested in speaking with Harold about today's featured diamond, and this is a must-see. If you have never seen one of our featured diamonds before, go right now, rarecoloreddiamonds.com, featured diamond of the week, and see the color on this beauty. It's a 0.68 carat radiant cut, fancy green blue. And when I saw the color on this diamond, out of all the diamonds we have featured, this would definitely be in the top 5 for color. And I was almost thinking, hey, wait a minute, we've got to keep this one. We can't let somebody invest in this. This is amazing. But the truth is, Harold, that's what we do. We allow people to invest in spectacular museum quality investment diamonds, and this is one of them. And when you take a look at the color on it, it really is one of the most special diamonds I think we have ever featured on our radio program.
You're right, Randy. And again, all you have to do is look at the picture of it and understand that this is a very, very, very rare diamond. It's not the largest diamond in the world, but the color of it is absolutely sensational. So here's what this diamond has going for it. First of all, it's a one-of-a-kind because of the color. So it's a 68 points, so it's over half a carat. It's a radiant cut, which is a square-cut diamond. It's a fancy, vivid green-blue diamond, even though the blue is the most predominant color. And the fact that it's vivid, it's got the highest saturation of color. It's got a decent clarity, too. So, the beautiful thing about rare color diamonds is that they're a different type of investment than more than likely anything that you've invested in before. First of all, it's portable and private. There's no other investment like it. And with the world the way it is, with what happened in Britain where their currencies plummeted, and now in Egypt and all over the world, when their currencies get affected, the beautiful thing about owning a diamond, it can be sold in another currency. All we have to do is hold an auction or sell it in that particular country, and we can pick up that currency, and that's extremely important. Right now, diamonds are sold in U.S. dollars. So the fact is that if the U.S. dollar is going to continue to go higher, then it makes sense to put your money into an asset like this, because not only will the diamond go up in value, but so will the currency. And that's what we look to do in our diamond business, is to make a profit on the diamond and to make a profit on the currency. And diamonds are about the only asset that can do that. Now, when I say diamonds, we deal primarily in colored diamonds. Colored diamonds, and not all colored diamonds are investment quality. This particular one certainly is. Because of the color, because of the clarity, because of the saturation of color in it also, it's vivid. But the fact is that rare colored diamonds never ever decline in value. So when you're looking to invest, especially in a world like we're in right now, where nothing seems to make sense, nobody makes money in retirement savings plans. In fact, hardly anybody has made money in Canada in a retirement savings plan in the last decade. So obviously that's not a great investment. On top of that, real estate in Canada is a little bit suspect because of the 15% tax that they put on speculative real estate in Toronto and Vancouver. So the fact is that when I look at an investment, I look at the first thing, which is how risky the trade is, how risky the investment is. I look for capital preservation, to invest my money in an asset that's not going to lose its value. That's first and foremost. You can't say that with a stock or a commodity or almost any other asset but a rare colored diamond. So we look to make sure that the investment that we make is a safe investment where the investment is going to be stable and is not going to decline in value. And rare colored diamonds certainly gives you that, because most colored diamonds have never ever declined, because most of them are one of a kind. Then on top of that, the next thing is you want to make a return on your investment. So the first thing is capital preservation, not losing your money. The next thing is making a return on your investment, and colored diamonds certainly give you that. A diamond like this one here could go up by 15 or 20% a year. If you put your money in the bank, you're making less than 1% a year. If you put your money into the stock market, 90% of the people that trade stocks lose their money. So why in the world is that even a viable investment for us? You know, the thing is, if you're George Soros or Buffett or those guys that own these massive companies that are billionaires, that understand the inside out of the stock markets and what makes it tick, you know, then those type of people belong in the market. People that don't understand the stock market, that give their money to a financial advisor, in most cases a financial advisor has no idea what's happening. In fact, if you follow that financial advisor home one day, you would find out that in most cases that your financial advisor is not more successful than you are. So why would you give that person your money to handle? What we need to do at this particular point, because the markets are so tough, 90% of the people in stocks lose their money. 90% of the people that trade commodities lose their money. The fact is that interest rates are down to below 1% and soon going to go negative. What that means is that you're going to put your money in the bank and you're going to have to pay the bank interest on keeping your money there. How ridiculous is that? Then they passed a bill in Canada called the C-15 bill, and amongst other things, it means that the Canadian government is going to allow bail-ins. That means that the banks in Canada are primarily owned by the Canadian government, and they're not even going to back up their own banks. If the bank fails, they're not going to bail it out like they do in the United States. What they're going to do, and this was just passed in June or July, it's called a bail-in. They're going to take your money. Let's say, for example, you have $500,000 sitting in your bank account, and that bank gets into trouble. Do you realize that they could take your $500,000 less the $100,000 insurance that you have on that account? You would get back $100,000, and they would keep $400,000 of your money. It's called a bail-in. It's the most unbelievable thing, and I'm shocked that the Canadian government has actually done that. And what it tells me, because the banks are owned by the Canadian government, what it tells me is that they have no faith in the banking system. Because otherwise, if they did, they would bail out the banks if they got into trouble, like they did back in 2008 in the United States, where the mortgage crisis hit, all the problems hit, and the U.S. government printed all that money and bailed out not only the banks, but General Motors and Chrysler and the insurance companies and all that. and got things stabilized again. In Canada, what they're going to do is that if the real estate market gets in trouble or the banking system gets in trouble, you're on your own. The insurance will cover $100,000 in any one bank account, but anything over that, they're going to take your money, pay off the debts of the bank, and they're going to give you worthless shares in that bank. Google C-15 bill, and because it encumbers other situations, pay primarily interest to the Canadian bank bail-ins. So if you go on Google and type in C-15 bill, bail-ins, you're going to see something that is going to absolutely shock you. If you don't understand it, if you need more clarity on it and what it means to you, pick up the phone and give me a call. I speak to clients every single day. There's no egos here or anything. We've done this show, Randy and I, now going on 17 years. Our clients and listeners to the show are everything to us. We don't charge for the radio show. We don't charge for seminars. We don't charge for the newsletter. We don't charge for anything like that. We give you the information you need to make an intelligent business decision. And with as crazy as things are in the marketplace today, you need that information in order to move forward and make the right decisions. We don't want you, out of necessity, because you're making 1% or less in the bank, to go into the stock market. 90% of the people lose. Almost everybody that has their money in a retirement savings plan is losing. And if you don't understand the currency markets, you're going to have issues there. Give me a call. I speak to clients every single day. I will explain to you what your options are, how you should deal with C-15, and what our private investments are that are making our clients 25% a year or more, and they're making that in U.S. dollars. You know, the thing is that we're in the alternative asset business. We don't trade paper here. We don't do anything with paper. Everything is tangible. When you buy a diamond, that diamond is shipped to you. You own that diamond. You hold it in your hand. If you need it, it's there for you. The same thing with physical gold. We ship physical gold, physical silver, physical diamonds. Our private investments, you're going to be my partner in certain deals that I buy on rough, uncut colored diamonds. So the fact is that there are still opportunities to make money. It's just not in the conventional way that we used to make it. And right now, if you look at what's happening in stocks and mutual funds, and 90% of the people are losing there, and nobody's making money in retirement savings plans, you'd be foolish to sit in those investments and expect anything different is going to happen. What we need to do is make changes in the alternative asset market that will help you and your family get to where you need to go financially, and I can definitely help you with that.
Speak with Harold, 1-800-432-1022, 1-800-432-1022. RareColoredDiamonds.com is the website. As I was saying earlier, if you have never gone to Harold's website, go this week and take a look at our featured diamond. The most beautiful color on a diamond I think I have ever seen. It's a .68 carat radiant cut, fancy green blue. The blue color is simply amazing. It's nature's art. Absolutely gorgeous. Go take a look at RareColoredDiamonds.com. Connect with Harold, as he mentioned. He's got programs in place where you can start making money today instead of sitting in a GIC and getting less than 1%, really making negative returns when you factor in inflation and taxes. Connect with him, RareColoredDiamonds.com, 1-800-432-1022. In the world of diamonds, some stories. Graf presents the world's largest flawless heart-shaped diamond. The bold diamond merchant Lawrence Graf made history once again when he unveiled the Graf Venus, a 118.78 carat D flawless heart-shaped diamond. You can see that story in our newsletter. Also, the world's largest pair of pear-shaped diamonds could fetch up to $30 million. Newly created set of drop earrings featuring the world's largest pair of pear-shaped diamonds is expected to bring up to $30 million when they go on the auction hammer, Christie's, Geneva, November the 15th. These diamonds are absolutely stunning. And one of the other things that we had from last week, it's an ultra rare, and they think it could go for $25 million, sky blue diamond, and it's going to hit the auction at Sotheby's. The ultra rare $25 million, November 16th in Geneva. It's an 8.01 carat rock dubbed the Sky Blue, described by the worldwide chairman of Sotheby's International Jewelry Division, David Bennett, as wonderful, clear, celestial blue. The estimate on it, 15 to 25 million. They think it definitely could go for $25 million. And when you take a look at diamonds, and I really encourage you to look at our featured diamond this week. The color on it is something you must experience for yourself. We have a video at rarecoloreddiamonds.com, featured diamond of the week, 0.68 carat radiant cut fancy green blue diamond. We have a picture of the diamond in our newsletter. This is a one-of-a-kind. And when we talk about diamonds, nature's art, private, portable, stable wealth, that's what we're talking about with our featured diamond this week. It is one of the rarest of the rare, and the color on this, I got a picture sent to me, and I took a look at the video online, and Harold, I was just absolutely stunned. I just think that this is a massive home run for somebody who's willing to invest in this diamond because the color on it is simply stunning.
I agree with you 100%. It is such a beautiful diamond. And blue diamonds, as you've mentioned, have just absolutely skyrocketed in the last decade. They've gone from $200,000 a carat on a vivid blue diamond to the last one selling for over $4 million a carat. So, again, what we're talking about at this particular point is that an asset that can go up tremendously. We've, talked in the past about diamonds that have sold mostly blues. In this last couple of years, blue diamonds have dominated the diamond market. It was Shirley Temple's diamond back in 1940 that her father purchased for her for under $10,000. I think it was around $7,000, and that was sold this year for $25 million. So rare colored diamonds, they're a long-term investment. You put them away for the future. It's not a short-term thing. You put them away for retirement. And, for example, you don't have to spend $25 million. Most people don't have anywhere close to that money, obviously. Most of our clients that invest in diamonds, they invest between $20,000 and $100,000. You could buy a 1-carat yellow flawless diamond for about $20,000. That diamond will go up by 15% a year. In fact, back in 1980, a 1-carat yellow flawless diamond sold for $500. Now they're over $20,000. So the longer you put these away, the more valuable they become. I've got 4 young grandchildren, and they've all got diamonds put away for the future. No stocks, no bonds, nothing like that, nothing paper, only diamonds. They never lose their value. They go up tremendously in value. Because we have a bit of a new audience this week because of the hockey game, I've mentioned this many times before, but my wife's girlfriend inherited a 5-carat pink diamond from her grandmother. The story is her grandmother bought it 50 years ago for $50,000. The diamond today is worth over $5 million. I've bought several diamonds that have gone up crazy numbers. For example, back in 2003, I bought a 2-carat vivid pink Argyle diamond, and I paid $200,000 for the diamond, and that diamond is now worth over $4 million. And that's been in the last 12 or 13 years. So, again, you can put away stocks for your future, but it just doesn't work. Almost everybody that has retirement savings plans has not made money in 10 years. Let me show you how we've made money for our clients, and it's all in U.S. dollars. If the U.S. dollar is going to continue to skyrocket, which I believe it will, and the Canadian dollar is going to continue to fall, which I believe it will, you need to get out of Canadian dollars and get your money into U.S. dollar-based investments that are going to work for you, not like a retirement savings plan that doesn't do anything. So give me a call. I'll explain to you how we work here. But again, we're very conservative. We're not risk takers, but we're making much better returns on our investment because we allow our clients to partner up with us on private deals, and that's worked out to both of our advantages. Let me explain to you how that works.
Speak with Harold. The call is free, 1-800-432-1022, and anything discussed, 100% confidential, 1-800-432-1022. RareColoredDiamonds.com is the website. Our featured diamond of the week And I really encourage you, if you've never gone to Harold's website before, this is the week to do it. Take a look at the featured diamond of the week, rarecoloreddiamonds.com. Click on featured diamond of the week. You will see one of the most beautiful colors on a stone that we have ever offered. This diamond is a 0.68 carat radiant cut, fancy green blue. And the color on it is one of a kind. It really is nature's art, millions of years in the making, and this is a museum piece without a doubt. We love diamonds for privacy reasons, portability, estate planning, price stability, good long-term growth. It was back in August of 2005. Harold originally wrote his report, Naturally Fancy Colored Diamonds, the Best Kept Secret. And at that point in time, they were a secret, but Harold brought them to our attention and educated us on how we could invest in diamonds and make money. And during that time, it has been astounding to see the success of the colored diamond market. It has taken the world by storm. Obviously, the art market has been strong. You have cars, watches, you have all sorts of different collectibles, baseball cards, hockey cards. Hard assets are doing very, very well in the low environment that we're in because people want a hard asset where they wake up one morning like they did in Egypt this week. Suddenly, half of your money's gone. They've devalued the currency by 50%. And here in Canada, the question a lot of us need to ask ourselves, will we be able to retire? And that's where Harold comes in. Speak with him. He has different programs in place where you can start investing and make money today. That's why we do our radio program to help you make money. 1-800-432-1022. The website is rarecoloreddiamonds.com. And Harold, we have about 2 minutes left.
Well, again, at this point here, Randy, we've got a big week coming up next week, obviously, with the elections. That's going to give us a short-term direction in the markets. If Hillary gets in, we expect that the markets will remain fairly calm. If Donald gets in, we expect some fireworks for the short term. But again, listen, he's a billionaire. He's made a lot of money. He understands business. Politicians have done a horrendous job. Everybody's looking at a change, and as rough as this guy is, and as much as he puts his foot in his mouth and everything, he's still a billionaire, and he does know how to make money. So I think at this particular point, it's too close to call. She's a career politician. He's a billionaire. We're going to see what the people want, and then we'll deal with what the markets deal next week. But again, at this point here, the longer-term direction is for the U.S. dollar to continue to go up, and we want to take advantage of that, and I'll show you how to do that.
I saw a joke this week where they said the Washington Redskins would finally change their name. They will now just be known as the Redskins, no more Washington, because of all the corruption and how much people hate politicians. Thank you very much, Harold Siegel, for your knowledge and another great show.
It's my pleasure, Randy. I wish everybody a wonderful weekend and a very profitable day.
Go take a look at our featured diamond. This is a one-of-a-kind. The color on this diamond is something to behold. It's really nature's art. The diamond is a 0.68 carat radiant cut, fancy green blue. See it. rarecoloreddiamonds.com, featured diamond of the week. And yes, you could own this diamond. You could invest in it. Speak with Harold at 1-800-432-1022, 1-800-432-1022, or rarecoloreddiamonds.com. Now, we will find out, I guess, sometime, as Harold was saying during the week, what happens with the U.S. election. Good luck to our friends in the United States. And good luck to our Edmonton Oilers as they play the Detroit Red Wings. The Face-Off Show is coming up next. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.